Good morning, everybody. It's 11:30 a.m., April 7th, Thursday. And I have been looking at a couple things going on this morning. It looks like Ford dumped and it's going down. It's going to head to roughly 1250. SOFI, SOFE, or I'm sorry, SOFI is in the process of dumping. Let me go to that chart. I was just looking at that. This is the 1-year chart. And you can see that there's a lot of stocks out there that have already been devastated. SOFI was up near 27, I think. And you can see since then, I've drawn in a couple lines here. I zoom in. What I did was today it's challenging a double bottom that it put in on middle of March, 14th, 15th of March. And it got down to 770. And it broke that today, briefly. So the question is this a double bottom? And it's going to bounce. Because what I did is you look at this purple line right here. The two purple lines, the three purple lines I put in, two parallel to the channel, and then one on the double bottom. That's a wedge, right? And as it gets closer to the end, it typically pops up or it pops down, breaks down. And typically you wait to see which one. This is how some people trade. They make a bet on which way it's going to go. But the options are not really, in my opinion, very good for the risk you have to take here. I think July $7.50 put is paying $1, roughly $1. So that's a bottom of 650. If this thing drops, right, what happened is today, and that's one reason why I wanted to make this video, is just to drive home that the enemy to most traders and most citizens is the government and the people associated with the government indirectly, like the Fed. Because what happens is today they announced that they're going to extend the moratorium on student loans, and that's what kicked SOFI in the teeth today. It's down 11.5%, down $1 because of that. So the question you have to ask is the market overreacting and it's going to bounce? Or is this just the beginning of a further fall? If it breaks through this line at the end by today, then you can see where it could go. Because if you look up above, it's been tracking in and out of this up and down this channel all the way down, give or take. So if it comes down to this channel, we're looking at $5.50 in the near term. If it keeps going, then you can see it's going all the way down. The question is, what in the economy right now is going to give any confidence in a bank that doesn't generate a profit, right? So where there's opportunity, there's a reward. Where there's opportunity, there's risk. And this is where you have to make a decision. So if your plan is to hold this stock long term, then this may be an opportunity. Or you can wait to see if it's going to break this line. And if it doesn't break this line in the next day or so, then maybe that will give you the confidence to go in long. The second one is here. I've got Ford right here, so we can look at Ford. Ford is just a giant head and shoulders there. There's the head. And you can see it broke down. Look at that gap in February. Gap down from 1989 down to 1852, and that's never been recovered. And hey, in this day and age where they can't get chips to ship cars, I don't know where they're going to get their profits from. So those people who rode this up did the right thing and got out. Look at that selling. Boom, in January. And you can see in the last month, actually last week, it's dropped down from almost $18 and it's down below 15 now. So there's some initial support right around 14.29, 14. It's below all its moving averages. Volume isn't terrible. But this is going down. So we'll say 14.25. That looks like it where it's going right now. Just looking for support. 14.50. Yeah, 14.50, 14.25 to 14.50 doesn't hold. Then it could potentially go down here. 12.50. I mean, if you've ridden it down this far, I don't know what's the point of selling at this point. You've already ridden it down 10 bucks. That's why you can't be afraid of selling. I mean, these people, these stocks are not your children or, your friends. Bottom line is if they violate certain conditions, then they gotta go. They gotta go. Probably, I can see where somebody could get caught off guard by this happened in one day. It fell on January 19th. It fell in one day. It fell from 25 bucks down to 22.50. Boom. Right there, then and there. If you wanted to wait till the next day to see what happened, but when the next day it continued down, you have to get out. You got to get out. I mean, most of these people probably wrote it up from here. I mean, this is the definition of being a pig. Bulls and bears make money, pigs get slaughtered. So if you had bought in, even if you bought in at $20, that's when you're like, okay, I'm out. I'm out. And then what did it do? It dropped down and it consolidated, chopped around here. And that's never good. When it starts chopping around like that, after a big fall, get out, because all it's doing is it's basically, it's about to drop. The bottom's about to drop out, and sure enough, boom, look at that, dropped, gapped down overnight, $1.50 overnight. And at that point, all those people now are underwater, right? So now, look at the volume there. Look at that volume there. The next day, the volume is 211 million. So they get out after that chop. And Ford, I'm sure they're an institution, but Ford, there's probably a lot of retail traders in there who unfortunately rely on too much emotion. It's not, you got to get rid of the emotion. You have to know ahead of time where you're going to cut if it violates. And once it violates, it's a done deal. If you say, if it gets below $22 or 20, whatever number it is, once it goes below there, should be automatically set up go. Or if you do it by manual, then you got to go in and you just have to dump it. Either that, or you have to put on a hedge to protect yourself on the downside. So anybody who is up here, once it dumped like that, then what you do is you go in and you pay the insurance and you pay the hedge. I mean, these aren't pleasant things, but what's happening is everybody's, we're going down, folks. We are going down. This buy the dip mentality is not going to work. In fact, I think what's going to happen is, I think you already see it. They're trying to build us up for war. Now they're saying that Russia is incompetent, they're weak. Look, the Ukrainians are kicking their butts. Is anybody over there seeing this? You're relying on some guy on YouTube or whatever the mainstream is selectively. I just saw a video this morning. It's an English company, I think, South China Post. And they're showing a Vietnam veteran. He's 75 years old, going over to Kiev to try to join the Ukraine. Hey, man, I don't know. Are you that indoctrinated that you, it's like these people with Ukraine flags around here? Really? Did you have Syrian flags? Did you have Iraqi flags when they were getting the shit bombed out of them? Unbelievable. Unbelievable that people don't stop and look at the narrative. So what they're doing is like Gerald Celente says, they take you to war. Well, you got to go back. September 10th, 2001, the NASDAQ had dropped 80%. They were panicked. So just happened to have 9/11 the next day, which led to a rally of the NASDAQ. And I think the NASDAQ is about to roll over again. Just did a dead cat bounce, and I think it's going down now. Doesn't mean there won't be blips up, but what you're going to do is you're going to see lower highs, right? So one high was here. Next one will not make it up to that point. It will make it right to here. And then we'll go down, make a new low, and then it will bounce. So you can try to time these things, but what it means is get your hedges on if you don't want to sell, or sell, and then wait until it does one of these, right? So if these people had sold Ford at $22, they can wait till Ford goes back to $12.50 or even lower and buy it back then. And you just, that's like putting $10 in your pocket. Same thing with SOFI. I don't know a lot about SOFI. I know that everybody was telling people to buy a year ago. I don't know if it was one of these ARK fund stocks. Here's another one. Okay, this one is another one that I think is going to drop like a rock at some point. Tesla. They're too reliant on China, number one now. They are, I think that they're supported artificially by the US and Chinese governments through subsidies and through preferential treatment. So that's a benefit to them. But, and I know there's a lot of soy boys out there who it's like the Tesla army, who, look at this, they'll take any opportunity to buy. That's fine. Like they say, you can ignore reality, but you cannot ignore the consequences of ignoring reality. And this stock is going back. Well, initially it's gone back down. It's going to retest the 750 level, probably within the next, I don't know, time frame. at some point, see what's going to happen is all these people have the buy the dip mentality, right? So when it drops, they're going to keep pouring their money into it. But think about that. Everybody runs out of money unless you're the Federal Reserve or the PPT, the plunge protection team, and the people who can actually print the money. You and I, we have to be more selective. Even hedge funds will eventually blow up. Yeah, so this level here is like the water level. This is the next, this is like where it will fall down to 775. It's where it's going back to. And then after that, it's going to be a dogfight. And people are going to go in and try to buy it, and it will chop up and down. But it's going to, even here, you can see in November, Tesla was at 1243. And then in January, it was 1208. And right now, it's at 1152, the highs. I'm talking the highs. So you notice it's going lower. It's going lower. As well as, so if we draw in lines here, and this is going to happen. Imagine putting, it's not so great, but imagine carrying 100 pounds over your head, whatever weight it is, but it's a little bit of weight. You know its weight. It's not like a book, and you have to hold it there. Well, eventually it gets so heavy where you just have fatigue, failure, and it just drops, and that's what's going to happen here. Could I be wrong? Absolutely, I could be wrong. Because, as I said before, the government is the biggest enemy to people who try to trade because something will come along like what happened to SOFI today, where the government changes the rules. They did with the Russian stocks a couple of weeks ago. Yeah, when this falls, wow. I'm looking for, look at that. This is just 2 years ago, 2 years ago. I don't remember when the Chinese plant came on, but if that Chinese plant goes poof, I think we're going back down immediately. After it fails the 750 level, it will try to hold this 580 level. So 775 down to 580, and then back down to around 400. And then can reevaluate what's going on then. Okay, that's my opinion. Even at $1,000, I wouldn't touch Tesla. It is above all its moving averages. Volume is, and that's the other thing. Look at the volume. Look at the volume back when it was going straight up. Look at all that volume. And look at how little volume there's been over the last 6 months, and it still managed to float up. It has you wondering what's actually behind this. This is a risky one because it is artificially being supported. And the narrative of EVs, anybody who has an engineering background knows that batteries and electric vehicles and solar panels and wind turbines, while there are specific cases where those are beneficial, as a general rule of thumb, the technology cannot be used as a primary support, as a primary form of energy and transportation. It's just not going to work. It's not going to work for many, many reasons. Usually what happens is the cost of those type of solutions are significantly higher than less expensive solutions. and less expensive solutions like coal, uranium, oil for energy, and gas. At this point, our infrastructure is set up for gas engines. And so that is going to be the best solution for now. And you can set up, and as far as pollution control is, well, that's a whole different debate. There are ways to utilize those energies safely, but it does take some effort. Okay. But we don't need to get into that here. The VXX broke in September of 2019. Roughly. That's when the repo market broke and the government suppressed volatility. And you can see what happened. It was, they basically tamped it down after the repo broke. So it went from 97 down to 53. Well, that's January. 660. Yeah, so that's 40%. Boom. And then the charade continued until it couldn't continue anymore. And then we had the market crash. And look at this volatility spike from 60 at that point, all the way up to 315, spiked 5 times. And now look at what's been happening. Now, volatility was elevated for a long time, for the first 6, 7, 8 months after this event. So you see there was some volatility at the beginning of 2021. Now, if we look at the last year, it's been pretty much down until the end of the year, right? So if we put a line in here. Right here, November, surprise, surprise. So November is when it broke out of that trend, and look, it tried to go back into that. Now, 6 months. Ukraine was February 25th, I think, 23rd. Okay, you can see what happened there. Spiked up to, it only spiked up with a war breaking out, a threat of war. It only went up to like 28 from 23. And then something broke back on the 15th of March, I was. Look at that. Yeah, something snapped. See, this is the danger is, the best analogy is you take a beach ball and you decide to hold it under the water. You really have to focus on that. The minute you stop thinking about it, or the minute your attention is taken elsewhere, that ball goes shooting up. How far you keep it down is usually how far it goes. So this went up to 42, and then they tamped it back down. Okay. And then they floated the markets up by the dips, whatever you want to call it. There was another incident. And now, look at that, in the last 2 weeks, look at this, no volatility. There was one day on the 28th where there was a spike, and they, look at that, they beat it, went up, they beat it down. It went up, it opened at 25, it got up to over 30, and it dropped back down to 25 in the same day. They're like whack-a-mole, right? And that's what we're playing now, it's whack-a-mole. So what that means is, if you're investing, is if you're brave enough to put money into certain things and it pops, take your profits before they whack them all. Take your profits. Do not assume that this is the first step of a run, because that's not what's happening right now. There are on certain commodities it's happened, but even some of those, when it starts running, they then shut the markets down. Again, they intervene, and that's the biggest danger. This thing with volatility, though, this is really a joke. Yeah. And look at the volume. Look at the volume. Look at all that volume on the left of the page. Boom. Gone. Yep. Somebody's playing with it. Somebody's playing. And we've been beneficiaries. Our country has been beneficiaries, and the wealthiest people in the world have been beneficiaries of all this. And at some point, I don't know if I talked about it in the last video, but Russia pegging their commodities, their oil, and soon to be other commodities that they have, to gold. Basically what they've done is they've said, we've pegged 5,000 rubles to 1 gram of gold to 1 barrel of oil. So that basically provides a floor on those commodities. So if the United States decides to come in and beat down gold or beat down oil, well, that will be very interesting to see how it plays out. What will happen is the United States decides to say, fine, we'll sell the gold at $1,400 an ounce. Then somebody's going to buy it for $1,400, ship it to Russia, and collect the basically arbitrage and make money on the other end. And they'll keep pulling that gold as long as they're allowed to. Just like what was happening before Nixon came in and said, okay, we're going to take your gold. And Nixon said, not anymore, in 1971. So that decree by Russia, I think, is through the end of June. So it'll be very interesting to see if the price of gold stays stable until then. Let's see what gold has been doing the last month. Okay. So this was the whole Ukrainian-Russia thing. And since then, it has come back down and it is consolidated in this range. So this looks like where the world has pegged the price of gold for now. But what's going to happen is this is also going to break at some point. Okay, everybody, those are just a few of my thoughts. You have to take what the market gives you, but you also have to be cognizant of the fact that something could come along and punch you in the face. And if you're not prepared for that, then you lose money. Markets always go up, right? Buy the dips, right? I think people will continue buying the dips until they run out of their money and they have no more money to buy the dips. And then the dip continues without them. And if that does happen, there are ways you can protect yourself with hedging. But I don't know how many people even understand how to do that. It's a good time to learn. Good time to learn. All right, that's all I'm going to say. Peace. Have a great day.